on this computer, and we are live. We are live. We are live. We are live. Blessings, my beautiful human beings. I already know the vibe. Trainer Will coming right at you with the sauce, with the gems. So, just real quick, like I said before, stocks can be traded. Anybody that got anything bad to say about Forex, they're a hater. Because the same way you could trade Forex pairs, you could trade stocks. And the same way you mark up a chart on USD CAD, gold, NASDAQ, you mark up Disney. You mark up Disney the same way. You mark up Microsoft the same way. Because why? This market has structure where it has impulses and it has corrections. Impulses and corrections. So you can trade Microsoft, right? You can trade Amazon. You can trade Amazon once again, just like a regular Forex trade, because it has structure, impulses and corrections, impulses, corrections. So now, like I was saying, with the stock market, they always only buy. So with that being said, essentially, we're only looking for buying structure points. So when the market has these big crashes, like the way that that you see right here, these downtrends in the stock market don't last long unless, right? Unless it is a potential major crisis, or once again, when it comes to trading stocks, when it comes to investing, period, is based off of the economy. So the stock market is based off the performance of these corporations and companies. So if there is a low output, then you will see a downtrend in one of these markets. A low output meaning low revenue, right? There was their profit loss ratio probably wasn't the best during that quarter, because once again, there's 3 months in each quarter, there's 4 quarters in a year. So October starts the 4th quarter, right? And as you can see, at this point in time, back in 2018, October made this high, right? So from the beginning of 2018, we trended up. So January started here, right? February, March, that's the first quarter, right? Coming into the second quarter, we dropped. April bottomed out, made a low, and we continued in the uptrend. April, May, June, boom, right? Coming into July, we hit a consolidation, created a low, went higher, right? April, May, June, that's the second quarter. July, August, September. September, right? You listening? September, right? From the transition of August into September, we created that high of the year, right? So the last month of the third quarter initiated the falling of the market. So now the start of the fourth quarter in October doubled out, right? It topped off. By it topping off, it created a double top, what we call a double top, right? Using our tactics. All it did was just mitigate out of a position and shifted the market lower for the whole fourth quarter. And as you can see, going into 2019, guess what? Started the uptrend once again. So the beginning of 2019, just like the beginning of 2018, uptrend, pullback, uptrend, pullback, right? So once again, anything is tradable. You just got to know how to look at the charts. And with that being said, let's get right into it. Yesterday and Monday went over market structure, right? I went through all the confirmations, the targets, and the chart breakdown for you to notice the different targets, right? The transitions, and how to read the different time frames to help you build a bias, right? So tonight we're gonna be talking about price action. Price action. What is price action? What is price action? All right. What is price action? So like I said, three main confirmations: market structure. We went over market structure and the three types of market conditions: consolidation, trending markets, and reversing markets. All right. We'll be talking about price action, which is consists of the open, high, low close of a candlestick and whole, half, quarter levels. So price action, the open, high, low close of a candlestick is price action. Simple, because without the candlestick, there would be no price action, right? And remember, price action is just the amount of money that was moved, right, specific to that time frame. So if we're on the daily, then you're gonna have a high, low, open, close of the daily candlestick, and it will show you how many pips, how much money was moved within that day. You go to the 4 hour, now you can see how much money was moved within that 4 hour time frame, and so forth. 1 hour, 15 minutes, so forth, so forth. Right. So price action is key when identifying targets and entries. Because like I said before, we identify our targets before our entries only because if we don't know where the market is going, how do we know how to get in? Right. So when identifying targets and entries, we're looking for whole, half, quarter levels. Right. Whole, half, quarter levels are major reactive areas, and we're mainly looking for a retest to have a trade setup. So we're either looking for a trade setup to get a retest at a high point to sell it to a low, or a retest at a low point to buy it to a high, right? So we look for a lot of wicks and multiple closings above or below, right? We look for multiple closings above if we're looking for a buy, or multiple closings below if we're looking for a sell. That helps represent a validation of a desired position in the market. So how can we tie in market structure with price action? So at the end of the day, we have to always remember, identify your trend. So I'm gonna go over GA, because GA, I've been trading GA ever since I started trading for real, for real. So this is just something I've always been tracking. So like I said, we go through the chart breakdown, checking the momentum. We can see that we're having bigger impulses and correction waves for a downtrend. Simple. So momentum is downward. So being that my bias of GBP AUD, the momentum is downward, I'm going to start shortening my playing field by looking for, right, my main targets. What consists of my main targets? Right, the trap money candle, equal highs, equal lows, price imbalances, right? Trap money candle, equal highs, equal lows, price imbalances. So from the monthly time frame, right? From the monthly time frame, price is right here, right now. And we broke the low of this range, right? Notice on the monthly, we've been sideways for about 5 months, right? We finally broke the low of the consolidation. So with that being said, right, we can potentially, make some runs higher to come and clear the high of the range. So that being said, I want to find major targets around this range and where price is now. So what I can see is that from when the market shifted higher, right, notice this candlestick right here, this bearish candlestick. Right, notice that bearish candlestick. When the market broke above this structure right here, right? Notice the market broke above the structure And a valid break of structure is a large candlestick through a zone above or below. And then when the market came back with this candlestick, notice this was the only bearish candlestick that was printed after breaking the structure before moving higher. And then ever since, we never broke below this candlestick. We respected that candlestick because this was what we consider a trap money candle. Why do we consider it a trap money candle? Because this was the candle that faked everybody out, acting like the market was selling, and then shifted the market higher and never came back, right? That's why we call it a trap money candle. So why is this candle so important? I literally just explained it. This was the candle that faked everybody out after the major break of structure. So this is the area of where price wants to play. What I mean by play, this is the area of where we want to find retest for buy setups. All right, we want to find a retest from this area where this candlestick is at for buys. So when it comes to identifying these candlesticks, we want to notice three main things: the open of the candlestick, the close of the candlestick, and the 50% of the candlestick, right? Those are the sweet spots of the candlestick. Here's why. The opening price of a candlestick is major because that's where all of the volume of the money had finished off from the previous candlestick to transfer into the next candlestick. Because remember, they actually pay to get these candlesticks printed because these candlesticks is showing how much money is moving. So like I said, I'm here to help you with the psychology of everything. So understand that the opening of a candlestick, right, is the transfer of volume from the previous candlestick. So that transfer of volume can manipulate where price can go from the start, right? The close of a candlestick is important as well because that's the area of candlestick where the volume, once again, was closed off at to transfer over to the next candlestick. That's why the open high, the open and close of a candlestick is important, because when you look at a line chart, what do you see? You don't see no wicks. So the line chart represents just the bodies of the candlestick. So we pay attention to the body because that's the meat and potatoes of the candlestick, right? That's the meat and potatoes of of the money that's being held in the market. So understand something. The high and the low, right? The wicks, the high and low of a candlestick, those are the areas that we're looking for the liquidity runs. What do I mean by that? To go higher, we have to go lower. And to go lower, we have to go higher. So notice, right, the wicks that's being left on the candlestick, right? Typically, from the monthly, weekly, and daily perspective, is a daily high point. It's a daily high point regardless. But being from the monthly, you would understand, obviously, that is a monthly high and it will take some time to get back there regardless. Monthly high and low. Then you have a weekly high and low. Then you have your daily high and lows, where ultimately the daily high and lows create those weekly and monthly high and low points. So at these highs and lows is where a lot of the money is sitting. So the market has to run a previous daily high or low to go in the intended direction that they want. So as you can see, that next candlestick ran the previous candlestick low, but closed back inside and went bullish. And then notice we ran the high, right, of that candlestick and came lower. All right, so we have to go high to go low, and we have to go low to go high, because once again, the market sells to buy, right? And it buys to sell, right? Understand that concept. So I'm pointing out this candlestick because of the fact that it is significant to where price is right now. So I'm going to be drawing a box on this candlestick, right? And I'm color coordinated, so every time frame has a color, right? Every time frame for me has a color. So as you can see, when we draw this box out, you can see that the market came down here multiple months to grab money just to go higher, because this was the zone to do that at, right? And when we stretch it out further to where price is now, look at that. We're getting buying action, right? We're getting buying action. So this is my, area of demand that I'm going to be paying attention to. Now, since I've, isolated my demand zone, right? I want to look for my supply zone. My supply zone is where I can look for sales at, right? And once again, supply and demand are just terms that are used to help you understand the ways of the market, the movement of the market. If we're at a demand zone, which means we're at a low, guess what? We're buying. If we're at a supply zone, that means we're at a high, that means we're selling. So what's significant about this market resisting right here? Like, what evidence in the past can I look to see that can help me understand why did they, you know, play resistance and stay trapped at this area right here? So we have 2 points of a monthly trap money area. We have this one right here, right? So the last bearish candle up move, and then the market crashed below it, but never gave a retest. So we have a nice open money spot sitting right here, right? So this is the next potential, major area that we're looking for a sell. All right, that's a trap money spot. But once again, it doesn't show me any reason why, you know, the market is resisting right here. So if I can go a little bit further left, right? If I can go a little bit further left, then maybe I can find something. So notice how we have this candles, this bullish candlestick, and then a bearish trend. So realize we had one monthly candle and then that went higher, and then we had 1, 2, 3, 4, 5 candles, monthly candles that went lower. So this is a significant candlestick right here. So imagine, right, we put a box from the closing of that candlestick and we just drew it out, right? We drew it out from the closing to roughly about the 50%. And as you can see, that's the reason why the market resisted from this area, right? So me personally, just with experience, you're just going to see how you can modify things and, just be more precise about what you are looking for. So as you can see, when the market broke above this price area right here, you can see a clear retest for a continuation of a buy, because in a buying structure, what do we have? Higher highs, higher lows, higher high, higher low, higher high, higher low, and go higher, right? It's really that simple. So when you can find something from the higher time frame, it'll literally help you out in the long run from a lower time frame perspective. So now we're on the weekly time frame. We're on the weekly time frame. So this is that candlestick that we were looking at over here, right? That monthly candlestick. I believe it was December, right? Yeah, so 4 weeks. So 1, 2, 3, 4, right? These 4 candlesticks, these 4 weekly candlesticks make up that one monthly candlestick that we were looking at, right? So what we want to identify in these specific areas are the nearest whole half quarter levels. So inside this whole zone, I will mark off, right, whole half and quarter levels. So the nearest level, right, the nearest whole level that I see in this area right now is that 74 flat area. Is that 74 flat area? All right, so we have 74. All right, we have 75 for a whole level. Just know we have roughly about a 1, 2, 3, 400 pip zone that we're potentially, marking off right now. So we have 74, 75, we got 76. All right. Now, once again, once you get everything down packed and you start practicing for yourself, you don't have to do all of this marking up. I'm just doing this for the education purpose only, so you guys can see what it means to look at price action. Right, 76, 77. Just so you guys can, be more aware and enhance what it is that you guys have been doing. All right, so I'm just gonna mark off those levels right there. So now let's just look from the weekly standpoint how the market played off of these whole levels, right? So we can see, right? So this was the first initial breakout of the zone. Boom. This was the breakout of the candlestick. So now we want to look over here. So boom, we can see that the market at one point during 1 week, right, reacted off of this 76 level, gave us a buy for 100 pips up to the 77 level. And then we played that 77 level as resistance, right? And we stayed within a 250 pip range, right? So as you can see, when this candlestick came in, we had to run the low of that weekly candlestick. And we also ran some lows to the left to grab money so they can at least go higher to get a retest, because we're in a short-term downtrend on the weekly right now. So what they're doing is just consolidating, faking people out and creating new orders just so they can ultimately make this bigger move over a span of 2 months, maybe, right? Over a span of 2 months at least, right? 2.5 months. So once again, trading is about timing, positioning, and pattern recognition, right? Timing, positioning, and pattern recognition. Pattern recognition includes price and where price is at. So major whole levels, right? These major whole levels will show you the rejections, right? Will show you the rejections and give you the confirmation whether or not, are they going to hold this level as support or hold this level as resistance. So all in all, right, we're essentially looking for the respect of this whole zone by watching the price action. So there's multiple times that we have rejections to the low, and they gave us some buy opportunities for a few weeks, but then they came back. Why? Because the trend wasn't over, right? A correction is what? 2 waves. 1, 2, impulse, right? So the market is constantly making these smaller impulses and corrections, right? Smaller impulses and corrections. So you being able to identify the fact that this is a bullish reversal zone, but we have to fill out some bearish orders to get to the bullish orders, All right, drop a one real quick if that makes sense. We have to, in order to get the bullish orders, we have to give out the bearish orders because we have to sell to buy. If that doesn't make sense, drop a two. All right, bet. So remember, the market has to sell to buy. So because we're looking at a monthly bullish order zone, because it's the monthly, it is a bigger reactive area, meaning that the market will spend a little bit more time there before actually giving out the move. Because as we can see, it's not that they didn't give out the move, they just really came back and retested a lot in this area. That's just really it. They gave out the move, they just retested a lot. So think about the big banks. They're holding positions here, 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 all throughout here in big profit. They watch the drawdown and they get more entries and more drawdown. And they're holding this stuff for months and weeks because they know in a year, because once again, you can trade the Forex market like the stock market. What is that one main strategy for stock market trade, for stock market investing? Buy and hold. People literally sit in all of this drawback in their stock profiles for a whole quarter so they can have a yearly bullish run. So they sit in drawdown for 3 months to have a 12-month bullish run. You can apply the same concept, right? So when it comes to price action, you want to find your target, which is your trap money candle. When you find your trap money candle, you want to identify the major whole, half, or quarter levels inside of that zone. Simple, right? So let's just go to where price is now and read the story of what they are telling us in this moment, right? So when they tap down inside this zone the first time, boom, look how they hit that first whole level. Major reaction, and then they shot up 600 pips in a matter of 2 weeks, right? Then they came right back. They cleared that low. I'm pretty sure if you zoom out a little bit more, they cleared some more lows over here because, like I said, daily lows and daily highs are targets. That's why we look for equal highs and equal low points. So ultimately, when the market dropped, they ran a previous major low point. After running that previous major low point, they hit that major whole level of 75, right? So they ran a daily low. Let me mark that off just so we can see it. All right, the low of that candle, 75, 611. All right, so we got that daily low. And notice we literally ran that low one day and we created a trap money candle while running that low. So when the market is running on liquidity, what do you think they're doing? They're creating another trap money candle, right? They made a nice move. So they trapped it the first day, broke structure on the second day, gave the retest on the third day, and then made a higher high on the fourth day, right? So when you are looking for, these reactions from these target areas, you're looking for wicks and closings above. So notice since they broke back above these certain whole levels, guess what? Wick to the low, close above. Wick, close above, break above now. Now we're above the next whole level. How do we want to read it? Wick to the low, close above. Wick to the low, close above. Wick to the low, close above. Take the trade. Next candle, boom, boom, out of there. Right? And it's the same thing when we're looking When we're looking, right, when we're looking for a sell, it's the same thing. Right, we hit this major zone right here. And what level did we play off? A nice whole level of 85, right? 85, 1.85 flat. All right, 1.85 flat. What did they do? They ran some highs. We wicked up there and closed below. Right? Let's find the next whole level below that, right? So from 85 to 84, that's 100 pips. So always remember, from whole level to whole level is 100 pips. From whole level to half level is 50 pips. From whole level to quarter level is 25 pips. All right. So just imagine we have this zone from 84 to 85. We have this zone from 84 to 85, right? We broke below that 84 level, right? Wicks to the high, close, wicks to the high, close, wicks to the high, close below. And the market eventually dropped. So they're leaving, wicks are a test of major areas to let you indicate that they're coming back, right? They're coming back. Wick, 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 go, came right back, right? They're coming back. So if we break down this zone real quick on the 4-hour, right, now we can see in between the zones more clearly and more of a definition of these candlesticks, right? And like I said, the same thing is happening on every time frame. We have a trap money candle right here on the 4-hour. Last up candle, down move, major down move. Now, to look for the next major down move, we wait for the retest in this area right here, right? Which is back around that major whole level. But there's other ways for us to read things, right? So now we got our whole level to whole level. That's a 100 pip range. Let's break down this 100 pip range now. We have 84, 500, right? So now that's so now we're 50-50, right? We're 50-50 now. So now we know if we take a trade from 84 and we want to buy, right? We know that we can first take profit at 50 pips, which is right here at the half level before we can go the full 100, right? So now we have our quarter levels. We have 84, 250, right? Quarter levels, 84, 250. We got 84, 250. And then we have, right, 84, 750. These are how you look for your whole half and quarter levels. And they're literally on every chart. All right, I can even go to gold real quick. I already have some levels marked off. All right, so we have 1860 for a whole level. We have, let me go down to the 1 hour real quick, right? 1860 for a whole level, 1862.50, all right, 1862.50. As a quarter level, 1865 is the half, all right, 1865 is the half level, 1867.50 is the next quarter level. So we have from 1860 to 1862.50, that's 25 pips. To 65, that's 50 pips. to 67.50, that's 75 pips. And now the full 100 pip range, 1870. Now, once again, you only really want to put markings on your chart at the area of price that you are looking for a trade from, or where price is now, so you can read the reactions from those levels to find your trade setups. Like, I truly believe that gold is about to sell right now. So you want me to be honest with y'all? Look at that. Go ahead and sell gold right now. Think I'm joking? Sell gold right now. So we may get a reach. So I don't know about y'all, but on MetaTrader, price is at the same price, 1864 right now. So we could get a 10 pip pullback to 1865, where they just came from, to get another entry. But just know 1864 is a valid entry, because either way, I don't see it coming back to this high. And if it does come back to this high, then the trade is just invalid. But I'm going based off of my original bias overall of the fact that we made this large move down, pulled back, consolidated, and then continued making lower lows and lower highs. So I'm looking to buy it out of this zone where they created this low point at. So that's why I would look for a sell right now, to be honest. And judging off the 15-minute, it's just giving out some great price action. So yeah, we can take this trade from that 64, 65 level. All right. As you can see, the better entry would have been from the quarter level. Why is that? Because this is the structure that we broke. We broke this structure, and notice, right? First sell, come back, second sell, double top, drop. Right? And I'm gonna actually go over the entries and whatnot, finding the optimal elite entries. Just know that this spike up above my purple Asian range zone, this right here was my confirmation to take the sell from here. And like I said, I'm gonna be going over that more in depth later on in the week, Thursday and Friday, right? But as far as this setup right here, I actually wouldn't risk much, to be honest, because I don't see them coming back up here. So I would risk maybe like, I would risk, so the entry would be around 1864, 1865. So the risk, if we took the trade from 1865, our risk would be at 1867, 20 pips. All right, we will be risking 20 pips. But if we take it from 64, we're risking 30 pips. All right, taking the entry from 64, we'll be risking 30 pips. But just know this is what we're looking for right here, risking 20. A nice 3-to-1 setup will give us 60 pips. But I'm pretty sure, man, listen, we're gonna go for the 3-to-1 setup. So we're gonna risk 20 to gain 60 right here. So TP will be, you can put your TP at 1858, right? We're gonna go below this low, 1858. So roughly 70 pips. All right, so we're going for roughly 70 pips. All right, so I definitely still see this dropping. So go ahead and, take this trade for real. I wasn't even expecting to call a setup, to be honest. So drop some threes in the chat real quick if y'all hopped in that trade with me, because I don't hesitate. Hesitation is death. So right, hesitation holds back your greatness. So if you hesitate, guess what? You already lost. If you hesitate, you already lost. You hear me? So yeah, so that's really like the main thing when it comes to price action, right? Understanding the candlesticks, where they are forming and where they are rejecting from. So as long as you find your targets, right? As long as you find your targets, then you will know how to read these levels. You will start gaining more awareness of how to react when the market is at a desired area for you, right? So even for this area right here, notice we have this last down candle up move. The market came back multiple times to get buys out of this zone. Now, what major levels are in this zone? So like I said, like literally, you can delete everything and just track certain trades from the daily. Right? You can delete everything and just track certain trades from the daily. So if we did not see, and delete all of this. Right? If we didn't see none of this that's going on, nothing that has happened, right? And we're looking at the market from the 27th of October. All right, we already made that move to clear these highs over here. Right, we had daily highs that we cleared. All right, boom, boom, money sitting. Got money sitting right here. Money sitting right here. Right, and the market came and crashed those highs. Right. So now this structure right now looks like buying structure. But as we know, GA did continue to drop overall. The reason being because we're in an overall downtrend. And like I showed you before, why we had resistance here, because we broke below a major monthly zone, right? So just real quick, just marking that back up so you guys can have that indication of why the market dropped. All right, go back down to the daily, boom, right? You want more confirmation, right? We have a nice little cube, right? A nice little trap money, because literally this was the last bullish candlestick, bearish move, right? Mark that off. Highlight that candle, drag it out, and then look, more precision, right? All of this is about having more precision and having a low risk, high reward setup, right? That 85 level regardless. So now from here, we know that we have higher high, higher low, higher high. So the next potential area to find a higher low at would be that last point of no return, which is that last bearish candle before the up move, right? So what major levels are in this area? 1.8, flat, a nice whole level. 1.8 flat. We have 79. You got 79,500. So I'm gonna just mark off this major hole and this major half level. All right. Sometimes the quarter levels matter when you don't, when a zone doesn't necessarily show that nearest hole or half level. So 79,500. Nice half level. All right. So gold did pull back to the 65 level. So if you guys want, you can take another entry. I know I did. Right, so boom, we have this nearest whole level, half level. So from here to here, that's 50 pips. So as we can see, and we have some lows, right? Some daily lows that the market can come and crash, all right? Because there's money sitting below here, right? There's money sitting below here. There's money sitting below here. So that's why they will come and attack these lows, right? Let's play this out. So notice, right? We had one trap money candle, right? Up move, down move, and then we came back with another trap money candle, up move, down move. Notice how they respected this candlestick, right? They never broke above it. They never broke above it and they stayed below it, right? So then they came back and created another trap money candlestick because literally that's all the market does. They create trap money candlesticks by retesting previous trap money candlesticks, literally, right? So we can even go as in depth as looking for the down, looking for the next potential sell so we can actually take it down to our buy zone, right? So we have a nice daily trap money spot. And let's find our nearest whole half quarter level. All I'm doing is just giving you guys the examples and giving you live plays of how this actually works and how, my trading system works. So we got 83, we got 83.5, right? Nice half level. And then as like I literally just said this, and now we have an area where we can mark off a quarter level because there's only a half level, and because of the zone, right, it's showing us that we can mark off that quarter level. So we got 83,250, right? A nice quarter level. So these are the two potential areas that I will be using to catch the next potential entry. Hope y'all took that second entry when it pulled back, because gold definitely just dropped again. So I definitely in profit. But like I was saying, so if we look at this from the 4 hour now, all right, let's let this play out. Boom, look how precise they look how precise they came back in there. Because now guess what? They made the initial move, right? They made the initial move and created a lower low. How is that a lower low? Because boom, in the uptrend, what do we have? Right, in the uptrend, what do we have? Higher high points, right? Higher highs, and we have higher lows, right? And then on a bigger trend, sometimes we do have, right, smaller higher high points and smaller higher lows. All right, so we have a nice higher high point right here. And the reason being because it came down here and created a higher low. Boom, market shifted higher, created a higher high, because this high is higher than these two highs. Right? It's really that simple, because now once you start tracking your trend, you notice what's going on. Right? Higher high, higher low. Market shifted higher. So this would be the higher high. And obviously, anytime a higher high is created, a higher low has to be created for a valid uptrend, right? So from this high, we created this low because this low retested that broken high. So we damn near have a higher low at the same point as a higher high, which is projected, right? And then we created another higher high, but now boom, the market shifted lower. Because like I said, what do we do on the 4-hour? What do we do on the 4-hour? We look for breaks of structure. So when the market shifted back lower, boom, we created a lower low. So we broke the uptrend structure. So we're now, when we see something like this is how we can start anticipating, looking for setups and looking for the next big reversal point. Any questions? Thanks for the call, bro. I got a busy day tomorrow, so I'm gonna catch some sleep. No problem. Do your thing, my brother. Appreciate you for even getting on, for real, for real. Definitely gonna catch up with you. But because this is recorded, you know, I'm posted on my YouTube. I'm gonna send it out in the chat. So you have a blessed night, bro. Appreciate you. Right. So after a lower low, what do we create? A lower high point. A lower high. Right. So that lower high is what's gonna help us understand everything else after that. Everything else after that. So notice when we created that lower high, boom, lower low, right? Because this low is lower than that low. And I use the line chart because the line chart shows more definition of structure, right? Lower low point. And even in the downtrend, we have smaller lower lows and lower highs, right? After that lower high, we created a nice little lower low right here, right? And then this high matched up with that lower high, boom, created another lower low, right? Lower high. And then the market, once again, the market is just going to follow the trend. It doesn't matter what wicks do. It doesn't matter because look at this lower high point. But when we go back to the chart, boom, it's wicks right there. So that's why we want to identify candlesticks so that way we can understand where the market can come back to retest. But overall, once we see a retest, then that's the confirmation to get into a trade. So as you guys can see, right, market had broke below and it gave us that nice retest precisely. So we could have taken an entry anywhere from this half level or quarter level, right? And because like I said, we twin trade over here. So you potentially would have had two entries, one entry here at the quarter, one entry here at the half, right? So obviously the one at the half will lessen your risk, right? Will lessen your risk. So if you take the trade at the half, you will have a risk of 25. You take the trade at the quarter, right? You take the trade at the quarter, you'll potentially have a risk of 50, right? But either way, right? Either way, we're looking to take the market below the previous low, right? And if we're looking at structure, the previous low is right here. Right, that daily low. So either way, we are still in a profitable setup, risking 50 to gain 180, right? Potentially 200 pips if we hold it into the buy zone that we're looking for. So if he was to hold this trade into the buy zone, guess what? Over 300 pips, right? Over 300 pips. So once again, this is just to help you guys, gain more awareness of what it is that you're looking for and helping you understand how to find the best setups and actually wait for the setups. That's the whole point, being able to wait. So as you can see, the market came down there, boom. It ran both the whole and half level, but either way, it still made its way back up, right? And it gave us a buy opportunity. So all I'm showing you guys is just ways for you to find buy and sell opportunities. It doesn't matter if you're going for 50 pips, but as long as you have a stop loss, right, that's way less than your take profit, you are valid. Because that's all that matters. That's really all that matters. You having a bigger take profit than your stop loss. So that's price action. Price action is helping you understand how structure is being made for these higher lows, right? And these lower highs. And potentially, once again, the starting point of a trend, right? You can potentially help you see the starting point of a trend. So for real, that's really it for tonight. Just being honest. Because when it comes to price action, it's just helping you notice the reactions from the levels so you can understand how to take these trades. Because now, right, when you think about it, notice, right, rejection, 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 rejection. We finally got a break. So when we see a break, look for the transition. Because when we broke, now we consolidated. That wasn't like the other reactions, because the other reactions gave us a straight shot out of there. Right? Gave us a straight shot out of there. But now this one, we broke it and now we're holding it there. Nah, something is up. We got to be like, this can't be buying anymore. It's really that simple. Why? Because we already noticed that they already reversed the market. Lower low, lower high, lower low, lower high, lower low. And what did I say before? The market moves in threes. Right? The market moves in threes. One, four. 1, 2, 3. 1, 2, 3. So let's not make this hard on ourselves and just really just take the time out to analyze more than we trade. If we analyze more than we trade, that means we will take less trades. By taking less trades, that means we are more profitable. Simple. Simple. So hopefully you guys got some, was able to have another breakthrough. Dom and Wealthy, appreciate y'all for being on here, for real, for real. Most definitely looking forward to just, continuing to just spread more value and being able to help people in the squad. But with this gold right now, like I said, if it hits stop loss, it hits stop loss. But just know that I'm looking for this sell-off to happen because I am looking for a buy. I want to buy it from down here though. So that's why I'm taking the sell position right now, because that's just what the market is looking like it's setting up for me. Appreciate that, Don. So that's it for tonight, y'all. Yeah, have a wonderful trading day or a wonderful trading night into the day, and protect your profits. Go back and study, back test, do what you need to do so you can become more efficient. And it's a savage world. Be fearless in it. You guys have a blessed rest of your night.